All right, today is September 2nd, 4:45 p.m. Eastern Standard. It's Labor Day. Not going to be a very long video. Just going to walk through what we're seeing as far as potential setups in the market. I'm about to publish my weekly report PDF for September 2nd, the week of September 2nd. We'll talk through trades we're in and things that we're looking at in the market. So let's kind of jump in here. As far as positions of positional interest, so if we're talking about where the speculators are and where commercials are heading and where people are getting crowded, either long or short, the positions I'm seeing right now of interest, one is this 30-year bond short. So if we pull up 30-year bonds here, the consensus right now that I find really interesting is that the Fed is going to come out and start doing a series of monetary cuts. Monetary policy is going to shift. We're now heading into rate cuts, and currently consensus is pricing in about 4 rate cuts before the end of the year. And there's still about a 30 to 40% chance of 2 rate cuts in the first Fed meeting here in September. I find that to be a little bit bullish. I think that's a little bit of a stretch. And I don't know if we're going to get as many rate cuts as they're planning on. So we're going to have to see how this, economic data continues to come out as far as jobless claims and PPI, CPI, the inflation metrics that are typically used here to guide monetary policy. We're going to have to continue to see how those come out. But right now I'm seeing positioning and really the consensus on the street being long bonds, because the more rate cuts that we price in here, the higher bonds are going to go. And if we are correct in the sense that there won't be as many rate cuts that are actually priced in, if we're pricing in too many, then we should see the 30-year bond fall. Now, additionally, if the 30-year bond is falling, what we should also start to see, or really where I'm going with this, the speculators are also, everyone has pushed this thing long. So everyone is pushing 30-year bonds long. And I think that there's a little bit of crowding on the long side. So this may make sense to go short here. And we are starting to see a little bit of a rollover of the price here. We had this kind of top candle, and now it's price starting to roll over. So I'm not currently in this position, but I am going to be watching this really closely. And I think pairing that, if you really want to hedge your bets, pairing that with going long the 5-year note could be interesting. I think that could be a fair way to hedge the trade in case we're wrong. Then we at least have a position on the other side, because if 30-year bonds start to go up, then 5-year notes are probably going up as well if those rate cuts end up being properly priced in. So that's something I'm considering. We'll see if there is a possible entry there or not. I think the more attractive trades I'm seeing are going to be RBOB, so unleaded gasoline. And I have been watching crude oil as well, and crude oil is currently outperforming RBOB. So I think there's going to be a trade here if we can find a little bit of a bottom. I don't like where we're at right now, and I don't like the recent price action. We had this massive gap down. We had a little bit of a fight back, and then we're right back to where we were. So there's either going to be an opportunity here where this bottoms to head up and we find a gap fill, or we're heading a little bit lower here before we actually get a position on. So I am worried that we're going to head lower before we head higher here, especially we're down 1.2% right now. I may consider a position here at some point. We also have crude inventories on Thursday that is going to, naturally impact the price of crude, RBOB heating oil. So we'll have to see if we're going to take a position there, or if we're going to wait and see if we find more of a bottom. Because if this ultimately breaks lower than that recent swing low, that's not a trade we want to be in. So we're either going to enter, and that's going to be the stop, a really tight stop, or we're going to just wait and see where this thing's going to bottom. But that's another trade I'm looking at. I think energies are still set up really well to go long. And unleaded gasoline here has been, speculators have just pushed this thing so low that I think we're getting near a bottom. So that's what I'm seeing. Another one is gold, and we're going to have to wait on some news failure for that one as well. But speculators have pushed this thing all the way to the upside. Too many people are going long on gold. I would like to see this thing get back to this Fibonacci retracement here. Actually, really we need to get rid of that Fibonacci because we're now at new highs. So that level should probably be adjusted or removed entirely. So let's kind of just take a quick look at this right now. So if we look at this wave that started, right, this massive up move really kind of started with this bottom down here. So if we want to add a Fibonacci from there to that recent high, Right now, we're kind of just sitting in between the 23% retracement and the all-time highs. So this is a very bullish move right now, and it does seem like gold is going to go higher before it goes lower. But speculators are getting crowded. It's not a very good position. I would be jumping in on the long side unless we have a really big pullback. I just don't like getting on the side where it's already crowded and consensus is all in the same direction. So not a trade I would be taking on the long side right now, but also really hard to short if we break all-time highs again. So might be a trade that we stay on the sidelines for again as well. But we are in on silver, so I'll talk through positions we're in real quick. So silver long, silver has been a laggard, and if gold does continue to push all-time highs, then we should see silver break back up here, at least the recent swing highs. Now, I would like to see this as a corrective move that stops anywhere above $28 before we start to head higher. We will see if that is going to be the right move. We've got a pretty aggressive stop in place here. But if this is per Elliott wave count or Elliott wave theory, if this is a corrective movement, this should probably stop above $28 before we move back up towards 30 and higher. So we'll see what happens as far as silver. I do like going long silver paired with gold short if we are going to try to hedge this. But right now we're just going to be long silver, and we're going to wait for potential opportunity to go short on gold as a potential hedge there on the trade, because it is crowded and it's also near all-time highs. And if we don't get as many rate cuts as we're expecting, that would be bearish on gold. So we're going to see what happens there. The other position we're in is the yen short. So speculators have this thing max crowded. So far, this has been a good trade. It's been down the past 2 trading days. We did see this top. We've seen kind of this chop sideways. We were trying to figure out if this was going to be a bear flag or if we're heading lower, and it's starting to look like we're going to be heading lower. So I like the positioning on that. There was also economic news that came out on Friday that should have pushed the yen up, and it actually ended up going down. So that was a news failure, and that's why we entered. The other trade's the Brazilian real that we were in long on, but we actually had the contract. We didn't roll it, so I think we're going to just end up taking a loss on this trade and just kind of wait to see where we might re-enter per our momentum indicator and also per the positioning. Right now, positioning is almost back to neutral on the Brazilian real, so probably not a position we're going to be getting in right now. We're probably going to just take a small loss on that. Other positions I'm seeing as far as A setups is just, again, gold is really the only other one I'm looking at is potential long on any pullbacks. I do like going long gold if we do start to see monetary policy shift and the Fed getting very dovish and starting to do more rate cuts. So that would be very bullish on gold. Gold's tough to pick a direction on right now because there's really two different narratives that could play out that could either take this thing way higher or it could take it substantially lower. And we're not going to know until September is really over on what direction we're headed. The street and everybody is talking about September being a bad month for equities. So we're really going to have to wait and see. I have a feeling that's not going to be the case. The fact that everyone's kind of pricing in equities going down. I mean, the Dow just hit a new all-time high here. If we go over to the Dow, I mean, we hit an all-time high on what? I think it was on Friday. It's yeah, maybe Wednesday, Thursday. I'm surprised that we're talking about rate cuts in general when the market's like everything's up here. Bonds are up, gold is up, equities are all-time highs for the Dow or near all-time highs for the S&P. The Nasdaq's lagging a little bit, but where's the basis here for rate cuts? I'm not really sure. I mean, the labor market's a big one, but I'm not really seeing this. Normally, you would think that prices are going to be off the all-time highs, and they're going to have to cut in order to avoid a recession. But this doesn't seem like recession market to me. But yeah, we'll see how things play out. I'm going to publish a report. We'll get this video out, and we'll talk soon during the week. Thanks.